GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, we had the Fed meeting last week. We had some initial dollar strength, but then we got a bounce off the lows in some of the major currencies, including euro dollar and cable. And dollar yen, that has been a situation where we look like we could be making some major range breakout. I'll talk about that in just a minute. And there was a sharp bounce back in stock markets off the 5% retracement off the 50 DMA, as we've been talking about. So now possibilities of trying to pick a top in the stock market. This is something we've been talking about for a while. I'll elaborate more when we look at the chart of the S&P 500. Otherwise, it's going to be the usual popular markets that we cover. If there is anything else you would like us to cover, please drop a comment in the video. We're always interested in feedback. Otherwise, just click that like button and more people get to see the video. Okay, let's have a look at the euro dollar. So this is our daily candlestick chart, and you can see here's that bullish engulfing pattern off the lows there. So that was our low from back in March, and we obviously had the false breakdown, rallied up, dropped straight back to the low again, and we're again pushing up off the low. So and as a reminder that we can look at our weekly double top situation. The market just not quite ready yet to break down from that double top, and maybe it won't. Maybe this is just a horizontal range that will eventually break to the top side. So that's where we are. It's obviously a major level, and the market hasn't quite made its mind up which way we go. So if we drop down to our 4-hour chart, you can see this is our range. Made the low, dropped down, made the false breakout, and it keeps each time we keep touching onto the resistance from that low. Was support, broke, and has become resistance 3 times. And it looks like a decent chance we move up to test it for a 4th time. And maybe the market does need to find higher prices to find more sellers to again try and drive the price through 117, which is this major support we're talking about. And an area where that could happen is, you can see that actually this, including this peak here, this low here, then this low here, then this peak here, around 117.80 has been a kind of pivot level for the euro, and it's also where this supply area sits, created before this big downdraft. So if we are gonna retest the resistance, and if we actually break through the resistance, this seems like it would be a natural area. And then obviously this is the 20-day moving average up here. So it would be just it'll bounce up to the 20 DMA and then roll over. That would sort of make sense. We could challenge 118 itself and the 20 DMA. That is some resistance. You can see that multiple times where the market does react from 118. And then we've got this little supply area up here where the market really over the next few days started to accelerate to the downside. So some potential areas of resistance up here. If you are just of the thought that the market wasn't able to break to the top side, it looks like it wants to break through 117, but just hasn't done so yet, and had some dip buyers at the lows here, and maybe we just need to push it up for one more attempt lower. Overall, it's range trading, and the further we get up into this range, well, you get kind of higher prices from which to sell, but it just gets less and less likely that actually it is a sell opportunity, and it's more just back and forth sideways trading. It's a range market right now in these couple of majors here. Dollar yen might be breaking out, and that might be a sign to us that actually there will be a breakdown in euro dollar and pound dollar, but it's not happening yet. Here's our daily chart in GBP USD, as I say. 136 has been the bid one, going back to really the start of the year. We've just not been able to break down through 136, and more recently resistance has been 139. We couldn't get through 140, tried again, failed at 140. Now we're stalling at 139. If it is a situation where we're gradually just eating up the buyers and sellers are getting a little bit more aggressive on every bounce, then by that logic, if we first made it to 140, Then we made it to 139. By that logic, 130. This next bounce will just get up to 138, another 100 pips lower, and then roll over again. Notice that this is probably the 1, 2, 3, 4th major test of this support. If we do get a decent bounce up to 138, and then another discernibly different test from the current one, down to 136, so there's a very good chance on that 5th attempt that it would break lower. The configuration of RSI is pretty much of a sideways market. We're not touching oversold and we're not touching overbought, but you can see we're a lot closer to oversold than we are to overbought. So there's a negative bias of challenging this major support at the moment. You can see through the RSI as well. We jump down to our 4-hour chart for just what to expect over the next week. I don't like the indent on MT4 is too big, so I tend to turn off the auto scroll, but then I find myself scrolling a lot. So you can see what's happened here is we've come into the major support. We've bounced up to what was support and found it as resistance. There was a little false breakout there, and then we rolled over. Now we've come back to this demand area created just before this big surge in the price here, which took us, through this resistance to multi-day highs. We've dropped back to it, and unsurprisingly, the price is kind of stabilizing in this zone that was created in this candlestick before the big surge up. So this is a potential a potential buy area to get back in on the second leg up from this one. So first leg pull back, and then second leg up takes us potentially up to 138. Because again, last time we came off the low, we basically got up to 139. Now we've come down to the low. Maybe we get up to 138 and roll over. Similar kind of idea to the euro. Otherwise, this support has held as resistance, and we're coming down to drop through 136. And if this area gives way, if 136.30, the bottom of this demand area, gives way, it looks like a very good chance that we just start turning into a more severe long-term downtrend, and we actually break below this 136, which has held as support for ages, and we start retracing some of this big uptrend that came in off the lows from 2020. So it would be good if we broke out of this range, because range trading is tricky, because really the only trades you can take are at the top of the bottom of the range, and you never even know then if there's going to be a breakout. In the middle of the range, there's just the opportunities, the probabilities of them working out are just a lot more reduced than if you've got a trend and you know where you're trading. Anyway, moving over to dollar yen. You can see here that on a daily candlestick basis, we've had our highest close since back here in I think that's the early part of July. Why don't I just use, you can see it's our highest, so yes, since maybe July 7th-ish, July 6th maybe, highest close since then, and closing prices are significant. So we've had a breakout on a closing basis, but we're just challenging this intraday high here, and that's where we've steadied a little bit at the moment. But you can see we've been in such a steady 109 to 110.60 range, and so it'd be good if we could actually get a breakout to the top side. We've still got that major peak up here of 111.60 to challenge, but having been in this sideways range for such a while, and if we can make a decisive break one direction or the other, you do feel like probably it should be sustained, because the market's actually, it's shown its hand. This is the way it wants to go. And if we pull out a little bit onto the weekly chart, you can see that the preceding trend was to the top side, but we ran into the top of these kind of the 2020 madness, which is basically 112, and even going back to 2019. So there's 112 where the market's just been kind of stalling underneath it for a while. It is major resistance, and if we do get a breakout through 110.60, certainly we're going to stall, at least in the short term, you would imagine, around this kind of 112, 112.50 zone created by these previous two peaks. but the momentum would certainly favor more upside. And actually, interestingly enough, if you look at this weekly candlestick, it does look very positive. The most positive candlestick we've had in a while, since this one. We had this one, and then we just petered out the very next week. In fact, to be fair, most of them have looked pretty similar. Long tail looks promising, and then just the next week sold off. So do we get another sell-off this week? It's very possible, but this can only go on for so long. All right, let's move over to metals. Let's have a look at gold. So, interesting question that we're posing here. Is this just a very mad-looking inverted head and shoulders? Left shoulder, crazy head with the big flash crash spike, and then is this the right shoulder that's forming here? It's already dipped below the left shoulder, but he had on, we never get these textbook head and shoulders. There was already a bit of a mess going on at the shoulders. The neckline has been very smooth, and you can see that actually on a kind of daily basis, the day after the flash crash, we had that consolidation, and then we broke to the top side, but we've come back and tested that demand area created by that little consolidatory day, and we started to move off the lows from there. So potentially an interesting buying opportunity here in gold. If we're making the assumption, even just making the kind of fairly modest assumption that it's not a head and shoulders pattern necessarily, but it's we're just going to go test the top of the range again. Well, that's still a few decent points away from here. It's fairly cut and dry with this. This is one of those trades where we could easily break to the downside again, but we're pretty close to the lows, and we kind of know where we're wrong here. If we broke below this demand area and we start pushing into the actual flash crash action, then I don't think we want to be buyers down there. But while the possibility of this inverted head and shoulders pattern is still on, and we're near the lows, there's some logic to this. All right, so there's not much more to add to gold, unless if you are slightly of a more bearish persuasion and just waiting for a bounce to sell into, then this one I think has already worked. So this was kind of the supply area. We had some kind of lows through there. We had that big spike, bearish engulfing reversal, and we came lower, and then we moved back into the supply area again. Then we got the big sell-off from within the supply area. So this has kind of already been used up. So that's why I think if we get up there again, I don't think it probably works again. But it could. None of these things are, none of these rules are cast iron, but, you do kind of set yourself some rules for trading to kind of go by. And just the way this market's teeing up seems to me like there is a chance that that we actually push up through this supply area, through this resistance, and maybe test the top of the area again. That would be normal. I mean, gold has been, it's been whacked by the strength in the dollar, but we did get a bounce off the lows in the euro, and the Fed meeting has come and gone. We've got a lot of Fed speakers this week, so let's see what they have to say. It wasn't the most bullish, it wasn't the most hawkish Fed meeting ever. They didn't actually give an explicit time when they were going to set tapering. So maybe it depends if these Fed speakers, if they come out more hawkish than the Fed meeting, that would be dollars positive and bad for gold. But if they come out kind of reiterating the kind of general hawkishness of the meeting, but without the specifics, I think that will give gold a chance to lift off its lows and the dollar take a breather after its strength, which is what we started to see on Friday. So inevitably a similar situation in silver. Again, we came down to the lows at 22, rallied up to the resistance, sold down again. So we're in just like a very neat range between the recent lows and highs, really 22 to 23. Let's have a look at the daily chart. You can see that we're in this downtrend, not really an environment in which you want to be a seller. There's so many layers of resistance. So 23, the first resistance, then just above it, you've got 23.40, thereabouts with these two lows. That's a resistance. And then you've got a supply area up here. which I think if we did get that bounce into the top of the range in gold and also a corresponding bounce in silver, this would be interesting because that is when that big sell-off started in silver, the second leg of it anyway. And then if you get through there, and you're basically getting through 24, then you're up to challenging just underneath 25, which is this supply area up here. So a rangy market. Things get a lot more interesting if we move below 122. If you think that happens, but you want to bounce, then look to these former supports as new resistance and the supply area, and they are possibilities to sell into. And then I think this trend line is quite decent. If we actually get up through 24, well, we'll still be looking at a kind of risk-reward potential sell opportunity up there, but it would look like the trend is reversing if we actually did even test those highs again. And so you wouldn't want to hold on to any sell trades too long, I think, if the price got up to here, because it would look like the momentum's turning positive with the break of that downtrend line. Okay, let's move on to the energy market. Let's have a look at the oil price. Don't know if any of you guys, depends where you are in the world, but fuel prices are heading higher. If you're filling up your car, if your house is heated by fuel, it's getting more expensive. And you can see that in this oil price right here. And then if you live in the United Kingdom, there's literally queues outside the petrol stations. A lot of petrol stations have literally run out of fuel. So it's literally a fuel crisis in the United Kingdom. That's one of the more extreme examples that I've seen. I don't think it's quite the same in the rest of Europe and elsewhere, but interesting. And if you are looking to offset the cost of your heating bills, well, so far, it doesn't mean it carries on this way, but so far buying these oil markets has been a good way to do it. And just to take a moment to toot our own horn here, we got this to the point last week. We talked about this as the zone of previous resistance. We even got, we've been calling this pretty well, oil recently. We talked about this supply area. The price rolled over from that supply area, and then before we got to this demand area, we talked about this was basically the important zone. These peaks through to these peaks here, and we had this exact zone drawn in. I haven't changed it from last week. The price neatly popped straight down, hit the moving average, hit the line that we drew in to the point, and has rallied up neatly. Tested the highs briefly, broke above, retested them, and then ran into the next highest supply area that we'd had joined in, which was basically 75. So there's been a really neat market to trade, really just, the complete opposite, in fact, to like euro dollar right now, which is just kind of chopping sideways and limited trading opportunities. When you really see a market with some good rhythm, that's one you want to concentrate on. And so that's where we are in oil. And it's looking positive right now. It's really, we are testing this, the high. So very short term, maybe the possibility of some weakness. We're testing that mid-July peak. And that came just after the kind of early July, which is the multi-year peak. It looks like we're pushing out. It looks like we're breaking to the top side. I'm not tempted to sell this market yet. If we do see some interesting price action at the high at 76, and maybe it's a double top, then that could be interesting. But it's a positive market for now. Switching gears to the S&P 500. So it did basically, last week we didn't talk about it. It was a bit silly. I should have just kept the lines on. I can't remember exactly what it was that we had on. I think we had 343.24. I can't remember the level. But we basically said, well, this is the peak. A 5% pullback is here, and a 10% pullback is a bit further down. And so it basically came straight back down through that 5% level. And the market bounced neatly back from that 5% pullback, and has now crossed back above that 50-day moving average. I think there are not many times at which you want to try and pick the top of the stock market. I think this is potentially one. Just look at this. There's a fairly long trend line here, which snapped. Now, obviously, it's still a positively trending market. So it makes sense that people bought the 5% dip and pushed the price up, because it's still a clear uptrend. You get a dip, the probabilities are in your favor that it works out, right? So that's all good and reasonable. But the break of this rising trend line to me spells a change of momentum. And that could just be that the market goes sideways for a while. It doesn't have to turn into a major bearish trend. But I think the break of that trend line, break of this similar thing in the RSI, the resistance that we're currently testing, which is what we're saying here, basically 4,500, bit under 4,500 realistically. 4,500's up here. So this is actually 44.88. If we get into 44.85. Little bit of weakness early on at the start of the new week. Either here, support, resistance, 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 maybe resistance again, or here, support, 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 resistance, resistance, maybe resistance again. And that's the kind of big demand area to look out for. If we zoom in a bit, we can see that's where the market consolidated, sold off from the high, broke down, tried to rally up, sold off in a big kind of bearish engulfing pattern there, and then the rest was history. We did that 5% retracement. So interesting opportunities to try, go against the grain, go against the trend, if you have some legitimate reason to do so, like these previous resistance areas. And if those resistances break, then okay, then we admit that okay, the uptrend is continuing. But just generally not a good idea to sell into an uptrend or buy into a downtrend. But sometimes there's a few reasons to think it looks interesting. Right, finally, let's have a look at Bitcoin. Let's have a look at that daily chart first. Looks similar to how we had it drawn in last week. Still that neckline of the triple bottom that happened through May, through July, basically. We broke through it. We touched 50K, basically, a bit above 50K, and then came back down to this neckline again. And we were sort of struggling a bit. That was encouraging, I think, on Friday. We got a bit of a bounce off the neckline again. But I sort of, looking at that, then that. I mean, maybe we're done. Maybe it's just A, B, C, and we rally up from here. I think that's quite possible. Buying into 40K for a move up to test the highs at 54, whatever it was, maybe up to 60. I mean, I still think probably the bias is positive here in Bitcoin. But it's not a super confident looking market. It's not a clear trend by any stretch. I mean, if you just kind of look from left to right on the screen, it's basically sideways, right? And you can even see the same thing in the 20-day moving average. It's basically flat and actually slightly sloping down. So I think interesting opportunities, just to summarize here, I think interesting opportunities well above 40,000. I think that's probably the linchpin price. Maybe a dip to buy into if you get down to these lows down here. I suspect probably not. And so just watch 40,000. I think if we get materially below it, you could sell into the momentum and expect a retest of the lows down here. But if it holds as it has been, then maybe that was the dip you wanted to try and play a move up to around 60,000. All right, that's it. Thank you very much, everyone. Thanks for watching. Thanks for tuning in. Make sure to subscribe to the channel so you don't miss these videos as they come out. Otherwise, have a great week trading. Thanks, everyone.